Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Thursday, the 2nd day of August 2012, and this is the daily report for gold and silver. Following a lack of action, this is according to the news, on the part of Mario Draghi over at the European central banks, disappointing news led the precious metals markets lower. As we stand right now, we are off about $12, $13 in gold. As you can see, current print 1588.80. The low today is 1582.60 and the high 1616.60. In terms of silver, that is also off over 1% today, down about 30 cents on the day, 27.24. with a low of 26.85 and a high of 27.94. There can be no doubt, when you take into account the FOMC meeting yesterday, the European Central Bank's announcement or lack of announcement today, and the upcoming jobs report tomorrow, investors and traders alike have not been happy with any kind of responses they have received so far. When we take a look at the market, this is, of course, a 60-minute chart in Heikin Ashi format. This is the first. This is the second here. So we have the Federal Reserve meeting, the FOMC meeting. It's taking place in this area. Following that, market drops. It drops and forms some sort of minor support at 1600. Not to be lasted at all, of course. Market trades sideways for a while. As you can see, market really spikes up, hits that high 1615 in that area, and it's really from there a runaway train to the downside. Not until it found some sort of resistance just at around 1585 do we see the market recoup, and we see, at least on a 60-minute chart, these Heikin candles attempt or start to go green in this area. Traders, regardless of all of the fundamental news out there, I try to pride myself in the fact that technicals tend to clarify the fundamentals for us. We have been talking about this really strong band of resistance over the last couple of days. We talked about the fact that it had failed on numerous occasions to be able to take that out. So when we saw the market moving up towards that area, and when we saw that for 2 days it had the inability really to take that real level of resistance out, if you recall, we raised our stops very, very tight. The way I worded it was just under 1600. And my thought behind that was that if the market would not be able to sustain this 1620, 1630 area, in most likelihood, on a technical basis again, because we don't know what fundamental news is going to come out of the market, but on a technical basis, it would probably take a stab to move back towards the bottom of this support area, at least come off of this particular resistance area. Well, there's no doubt this resistance absolutely held. When we take a look at this market, you can see that although we had highs in this area, there was no way that the market had the strength or the upward momentum to continue to move higher in that area. Well, what does that mean for us? My sentiment at this point is that we are obviously in the summer doldrums, but more importantly, that we're trading really realistically in terms of a very, very narrow band. That narrow band has these lows 1550 to about 1530, 1520 in this area. Those are our support bands. We have very, very good support there, but at the same time, we certainly have major resistance just at the 1630, 1635 level, and the market has not been able to take that out. Now, as we look at this market, if we are truly in a compression triangle, meaning a compression correction, this range itself is going to continue to get tighter. What we are not seeing is that on a typical compression correction, it will tend to trade towards the upper and lower bands of the particular triangle. And as the triangle moves closer to the apex, of course, you still get it hitting the upper and lower bands, but you get it hitting them in such a way as the range compresses. That obviously is not the case here. What we are seeing is a tighter compression within the compression triangle, if that can even be, if a case can even be made for that. And what we are seeing is that the market is absolutely not happy with any of the fundamental statements that have been coming out of the Central Bank of Europe or the Central Bank, the Federal Reserve of the United States. On to silver. You know, we pulled profits the other day specifically because it was my belief that we were unable to take out some key resistance areas in gold as the market began to move up. Now, within the silver market, we talked about key support levels, but there really isn't a major support level in the silver market really until it goes back down to below 27 into the 26 area, and that's this triple bottom. As you can see, we are still a ways away from that, but my belief right now is that sidelining on the market until we can position ourselves back on the long side closer to the support area in silver should be the key play here. My sentiment right now is when we take a look, let me go ahead and blow this chart up for us. What you can see is, although we don't have any kind of price gaps within the market itself, because you do have these highs here that go into the low here, we do have a price void in terms of the body, the straight body of the candle. And so what I would look for is at some point this void to come back and be filled. However, where are we going to find support? Is it going to be here at 2660? Because we have a couple of lows right in this area that if the market does continue to trade lower, we could find some supportive action here. If we do not, my fear is that this 2620 area right in here, it's based upon this low in the market on a technical basis, would be the next point that we would look at for the market to trade lower to. Traders, anything can happen in these markets, but in terms of straight technical analysis, my belief has always been if a market cannot make a new high, it will go and attempt to reach the lows. It certainly didn't make a new high. We absolutely stalled out right in this area. You can see very, very good resistance. That resistance had the inability to be overcome. We also get a candlestick pattern here that is simply called a three-river evening star. It's a variation of that because, of course, you have this red candle gapping into the price area of the former green candle, but it is a variation off of that. And what I like to consider when I look at three-river morning or evening is the fact that in essence what you're getting is that V-shaped bottom or V-shaped top. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up. Bye-bye.
Pick up every